Welcome everyone to another episode of Around the Block Talk. Today we have with us Mr. Adel Bhurtun, has worked at the Financial Conduct Authority and has reviewed the financials of various crypto and blockchain companies. Currently working in the same space. Very happy to have you here today with us.
Thanks, Pratik, for having me. So excited to be on your show.
Thank you. That's great to know. So, Adel, we can start with an introduction about you for our audience so they can understand what kind of background you have, and then we move ahead to the topic that we have.
Yeah, absolutely. So my background is in compliance, FinTech compliance. I started my career in London. I worked for the FCA for 3 years. I was the compliance authorizations manager, where I would receive crypto applications that would come in, not just crypto only, but fintech and asset managers, and as well as corporate finance. And I would be the one to review their application, whether they would, pass our, threshold conditions. They pass out. We have a set of threshold conditions that they need to pass in order to get approved. And I would be the one to review their profit loss account, their compliance monitoring program, their oversight, I would even also interview them. So that gave me a lot of exposure into the fintech world. And I was looking at, some of the play to earn crypto applicants, and they were making lots of money. And that kind of inspired me to get into the crypto space myself and started investing into cryptocurrencies and a few NFTs as well. And then shortly afterwards, while I was working for the FCA, I was also trading. The money I used, the proceeds I used from trading, allowed me to move to Dubai. And here I am looking to set up my own podcast.
That's great to know, Adel, your journey into this industry. And so we can move ahead to the topic that we have for discussion today. And so we can discuss cryptocurrencies and the blockchain industry, and also from the aspect of compliance, because that is your area of expertise. We can understand what's happening in this space.
Absolutely. So I think right now what we're seeing is a lot of companies are shifting the traditional model of equity to a model of a DAO, a centralized autonomous organization. One of the distinctive features of this is that it is for the community. It's community owned. It's changing the way ownership is run. In their old system, equity was owned by the shareholders, and then you had employees who were under them. But in a DAO, it's actually the organization it matches what the community members want. So if the community members submit a proposal that they want a specific NFT or a specific system to be implemented, then the owners of the DAO as well would have to take that into consideration. And that's one of the differences that we're seeing. But the problem that remains in a DAO is that there aren't any contracts really per se. These are all just a bunch of members in a Discord channel submitting requests or submitting or messaging messaging the members, and they sometimes have proposals that come in, but there's no actual sound or substance behind the DAO members. And so the problem is that there's unlimited liability, because how can you trust that the owners of the DAO will fulfill what they say they will fulfill, So yeah.
Right, indeed. So you say that there's a shift that is happening to now a structure of DAO. So how does that affect the compliance aspect of it, or how does that affect the ecosystem?
Right. So when it comes to compliance, there's hardly any compliance at the moment, because firstly you have to understand that a DAO is not a registered company. When you want to create a company, you have a registration number, you have a registration office address. These are things that we at the FCA at the time, when I was there, we would always make sure that we have to make sure that they have a presence in the UK, so that in the event that we need to knock on their door or we need to come, even if it's a raid, we can do that. But in a DAO, there is no registration. It's just I create something online, I submit this, I say this is a website, this is our Discord channel, this is our social media channels, and you can feel free to join us by buying an NFT or there's certain conditions you have to fulfill in order to join the Discord channel, and then you're in. But there's no contract to say, oh, if you do this, we will return you X amount of money. If you buy our NFT, we will return you 300. We will 3x your return and give that back to you. There's no contract. And the other thing is that if you're crowdfunding through the form of NFTs, which is what we're seeing right now, NFTs as well, they're not registered products. They're not registered securities. They are simply projects, you can say, that are on websites like OpenSea, and people simply funnel money from their bank accounts, transfer money, make a transfer, buy the NFT, show that they own the NFT, and then that NFT is then used to raise money for the DAO. But there's no contract that says if you buy this NFT, this NFT will make you money, or we will fulfill the criteria that needs to be fulfilled, such as allowing you to come to these events, allowing you to join our Discord channel. There's no contract that says if you buy an NFT, we will give you this. There's nothing written in black and white form, and that's a problem.
Right, indeed. So now also you're situated in Dubai as of this moment, and so I believe the Dubai government is making several efforts on this front of legalizing or regulating this industry, trying to attract the industry to their ecosystem. So how do you see how this DAO and this industry can be regulated so that it benefits both the parties and everyone involved in such an ecosystem?
Right. So the DFSA, the Dubai Financial Services Authority, which is the equivalent, the FCA equivalent, or the SEC equivalent, is trying to clamp down on regulating cryptocurrency firms, NFT firms as well. They're also working with the VARA, the Virtual Assets Regulatory Authority, which is also another Dubai regulatory authority, on how we can regulate these crypto assets so that we protect investors from losing their money, and also we protect members from joining Discord communities, and we try to basically, in the event of insolvency, the DAO, if the DAO that becomes insolvent, how will they return or fulfill what they said they aim to fulfill to their members? In the case of insolvency, if the DAO goes bust, the members can't say, hey, well, you promised me you would give me my money back after I paid for this NFT. You promised me a return of 3x. There's no way you can protect them. So I believe right now what we're seeing is these companies are trying to regulate them, trying to register DAOs as an actual company. It hasn't happened yet, but because this is bringing a lot of attention in the space, this is the reason why I believe this would be a step forward in the industry. As more regulation comes in, crypto adoption will follow suit.
Indeed. So also with DAO and crypto and blockchain, so with them, we get tokens along with them. And so there's a lot of there's a lot of gray areas in trying to understand what tokens are, what these virtual assets are, if they are securities or if they are utility tokens. So how are the regulations being shaped up to regulate this token economy that we see in the world?
Well, firstly, let's define what a token is. So a token can be a cryptocurrency, it can be a NFT, anything that is a digital asset, has a digital representation of ownership online. So tokenomics is like, what is the value proposition of this token? So the economics behind it. So if I buy this NFT, what is the utility that I'm getting in return? Examples include you get exclusive invitations, exclusive drops, exclusive access to another NFT drop that other members wouldn't get access to. And that means you can buy at a lower price than the public, the secondary market. Now, how we are trying to regulate this is similar to what I said earlier about DAOs being registered first, because without a registration number, you can't track the company. You can't go to their door. They can't go to their office. It's invisible. But when you have a registration, they become visible. Now, with the tokenomics, I believe this is something that's still a gray area because there hasn't been any talk about making NFTs or cryptocurrencies registered securities yet. So in the absence of that, or until that comes into play, then there's not really a way to track an NFT or track a cryptocurrency other than using CoinGecko CoinMarketCap. And so because of that, that's still a gray area at the moment. But the day that they become registered products, there's an actual manual behind it, like manuals that exist for derivatives, exist for stock holdings. And like I say, if you own an Apple share, there's a certificate of ownership saying that you own Apple stock. If there's a way that they can replicate that for the NFT space or replicate that for the cryptocurrency space, then there's a way that we can track it. And then, and in that way, there may be more crypto adoption. So yeah, there are challenges with this. People are probably against this because the whole point of getting into the cryptocurrency space is decentralized, not to be centralized, so that it's owned by all the members rather than by one single elite group of members who control everything. And that's why this space is growing a lot.
Indeed. And also, what is the kind of ecosystem developing particularly in Dubai, and how do you see companies coming over and setting up their offices and operating from Dubai in this particular?
Yeah, so in my short amount of time that I've been in Dubai since having moved, I'm seeing a lot of networking events. I'm going to a lot of networking events, and in these networking events, I'm seeing a lot of new companies form. New companies saying that we're here to tackle environment, we're here to tackle climate change, NFTs, we're here to tackle the Russian-Ukraine crisis, raising capital through NFTs. We're seeing a lot of, the ecosystem is growing a lot here, very, very much. It's sort of like, not yet rivalry with Miami, but getting there. And it's because of this, because of the openness, because Dubai has positioned itself as a crypto-friendly and tax-friendly location, many companies are actually relocating their offices into for those reasons. At the same time, the fact that the VARA, I just mentioned, and the DFSA are looking to regulate crypto means that there will be a sort of a memorandum of understanding between private firms setting up their DAOs and the regulatory authorities being open to innovation. Because Dubai is open for new things. They want to be the first when it comes to the newest thing, the latest trend. And that's the impression I got, and I still feel this way since I've been here. And there are new NFT drops every single day. So now that can be a problem because you can get lost in the abundance. There's so many that's happening. There's so much happening that you don't know what is a scam and what is not a scam. You know what I mean? So that it remains an ongoing challenge. But the way to address that is always the same thing that I've said before. Do your own research.
Indeed. So also for a lot of audience, a lot of consumers today, they don't really understand what these digital assets are, what these tokens are, and what it actually means to them. How does it change ownership, or how does it change the ecosystem today? So what are your views?
Absolutely, that's a good question, because the NFT space, the whole idea of decentralization is changing ownership in the sense that instead of it being owned by a few members, it's owned by everyone. That's the first point. Let me give an example. A DAO is an example of this, because instead of being owned by the members, the founding members, the founding members, by the way, don't get me wrong, do have a majority share or a majority ownership of the DAO, because they probably have a lot of NFTs that they own, which is fine, but they've set themselves up to learn and take into account the views of the members. That's why it's community owned. The second point, and I'll give an example of how it's changing ownership, is that, for example, you are a music artist. You create music. Normally, currently, you have to go through Spotify or pay through record labels a large amount of fees before it reaches the customer. You know what I mean? It goes through an intermediary, the middleman, before it goes to a customer. But now we're seeing that change. We're seeing artists themselves sell their music in the form of NFTs directly to members and public members of the public. And that cuts out the middleman. It cuts out the intermediary, and that's changing ownership. Now the NFT artist or the music artist has more ownership of their NFT project or of their music. And by the way, NFT, just for setting the record straight, is not just a digital art. It's not just only in the form of art. You can set a song as an NFT. You can set property as an NFT. You can make it fractionalized, by dividing the property value into multiple forms of NFTs, and then those NFTs can be sold. And then people can also own a fraction of a real estate or of a property. In the same way, songs as well, a whole full song can be sold as an NFT. So you buy the NFT, you buy the song instead of having to buy it through iTunes. And iTunes gets a share from the NFT artist instead of having to go through Spotify. Well, I still use Spotify because it has a huge playlist, but that's just personal preference. But that's just an example to show that how this is changing the ownership space.
Right, indeed. So also what personally excites you about this entire domain, and why would you choose to build a career in this and go ahead with this particular?
Yeah, what excites me about the domain is the fact that I feel that we are on the cusp of serious financial transformation. The fact that we are now able, me personally, I'm able to get a loan without having to go to a bank. I use a platform called Nexo. I also use another platform called uHodler. Feel free to check it out. I can lend against my assets, my crypto assets. So if I have Bitcoin, Ethereum, Solana, Polygon, whatever my holdings are, I can loan against them without having to go to a bank and ask for a loan. And this is in a few seconds of tapping my fingers on my phone, and I can get a loan instantly like that. This is changing the current system. You can get access to loans much faster, much more conveniently, and you have more ownership. You don't have to expose yourself too much to the bank. Tell them your proof of address, your passport information. This is really sensitive personal information. You don't have to share that to a bank all the time. So that's one thing that excites me. Another thing that excites me is look at the Russian-Ukrainian crisis. If you look at that, they have one of the campaigns that was run was raising capital through NFTs, where members didn't have to go through an intermediary so much, but they could just they can donate money through an NFT, and they own an NFT at the same time. And they can say, this is my badge of ownership. I donated to the Ukrainian-Russian crisis. And that's a good way of donating at the same time owning. And that raises capital that sort of unlocks finance for people. So people can then, so that help aid can be given to those in need. And so this is just one example, but this will change the way money is run and money works. Decentralization and giving ownership back to the people, the artists, the people who really put in the hard work, and cutting out the intermediaries. So this excites me the most, but most of all, what also excites me, and this is a double-edged sword, is the return on investment when it comes to investing into cryptocurrencies versus stocks. So you can really 10x, 100x, 200x even, and higher if you play your cards really well. This is not something I mean, if you use leverage, 100% you can do this, but you have to be very, very, very smart with your money and know when to enter and when to exit. I don't think you could do the same with stocks as much because they're not as volatile. Again, double-edged sword. You can also really 100x lose your money too. So yeah, so that's another way. If you're into money and wealth, this is for you. but do your own research very well before taking leverage of 20x or 100.
Right. And so also, why are governments today not very supportive of this? We see few government legislations, they are adopting it very rapidly, while in some regions of the world, they are quite apprehensive of this entire movement. So why do you think the governments are taking that step backward on this?
Yes, absolutely. And I can give an example. The FCA was completely anti-crypto only until recently, when the Treasury announced that it wanted to position itself as a global crypto hub. But previous to that, and I feel still, the FCA is still taking lots of precautionary measures before allowing these crypto applicants to come in. And only recently, crypto.com got approved by the FCA this month alone. Now, why they are so against this is because of the fact that normal members of the public aren't able to. They feel that it's too volatile in nature. It's too volatile in nature, and because of that, they want to protect consumers. They'd rather you don't invest in cryptocurrencies and don't lose your money than invest and potentially lose your money. That's the number one. Number two, there's no insurance behind crypto. You invest in crypto at your own risk. No one will pay you back. No insurance companies will compensate you. So unlike a banking system, if you are financially compensated. In the UK, you're financially compensated by the FSCS, which is another authority, up to 85,000. But when it comes to crypto, none of that. So because of that, because there's no actual substance backing crypto, like behind Bitcoin, there's no money behind that is backing it. For that reason, it is very volatile and it is looked down upon. But there are ways that are around this, like USDT, for example. They have a treasury of cash. Cash is backing USDT. There are some controversies around USDT, saying that, I'm not going to get into it here. But at least this is an example to show that if you have something backing the value of an asset, and you can prove that, then it gives confidence to people that in the event that the slippage occurs, you have cash support to back it up, put it back into you have cash from the treasury that you can invest back into the coin and keep the price stable. That's the whole point of a stable coin. So for those reasons, that's the reason why governments are anti-crypto and anti the space.
Right, indeed. So moving forward, do you see more governments and more regions adopting this? Do you see this becoming mainstream in the near future?
Yes, we do. I mean, take examples of El Salvador making Bitcoin as a legal tender. Take example of the UK only recently this year, trying to position itself as a global crypto hub thanks to the Treasury. Take, for example, Puerto Rico, Dubai, and most of the MENA regions. Not all of them, although. These are just, taking, for example, some certain states in the US, like Miami. So I do see this because of the decentralized nature, the tokenization, the voting rights that you get in a DAO that you wouldn't get in a normal company. Self-enforcement, the idea of smart contracts that automate organizational rules. The idea of autonomous organization, like a smart contract is only capable of handling simple transactions. And in the decentralized infrastructure, for this reason, this is the future, I believe. But we still have a lot of work to do because we're seeing still a lot of pump and dump, a lot of shilling, a lot of scams. So once these are able to be regulated more and more regulation comes in, I believe crypto adoption will soar for the future.
That's great to know. So with that, Adel, it was great to have you on the show. And
absolutely, thanks for having me. And let's keep in touch.